a market pattern where we've had strong moves up and then consolidation. And the consolidation is this exaggerated high 3,500 down to about 3,100, $400 price swing. We could see gold, if it maintains this bullish momentum, I think move as high as 3,600 and do that by the first or second quarter of next year, Kai. So you had gold right around on April 7th, you had it down at around 3,000, and it really didn't start taking off till Wednesday, the 9th day of April. That's when it would run from 3,000 up to the all-time record intraday high in futures, 3,509, above $3,500 an ounce.
Gold is undoubtedly on a roll. Its price has increased by more than 40% over the past year. Gold experienced a strong rally starting April 9th, surging from around $3,000 to an all-time intraday high of $3,509. After this sharp move, it entered a consolidation phase between $3,100 and $3,500. If bullish momentum continues, gold could break out and reach as high as $3,600 by early next year. Gary Wagner reveals that gold has seen a remarkable rise, climbing from around $2,670 in November to recent highs above $3,400 before pulling back to about $3,180 and then rebounding to $3,300. This strong performance reflects growing market uncertainty, especially around U.S. leadership transitions, evolving economic strategies, and geopolitical tensions. While conflicts in the Middle East and Ukraine persist, recent gold price movements have been more directly influenced by tariff-related uncertainty, particularly under Trump's policy shifts. These trade disruptions have heightened fears around inflation and economic stability, fueling gold's rally as a safe haven asset. Gold has experienced significant price swings recently, reaching an unsustainable high of over $3,500 before pulling back to a low of around $3,180 and then rebounding to approximately $3,300. Another factor driving the gold market upward is FOMO, or the fear of missing out. With new records being set, it has filtered through into everyday conversation in some quarters. Zoe Lyons believes that this is the case in Hatton Garden. People want a piece of the golden pie, she says, and they're willing to do that through buying physical gold. Before we begin, don't forget to subscribe and hit the bell icon for updates. Please share your thoughts in the comments and let us know if you find the content valuable.
Great to be back, really great to be back. And gold's doing some interesting stuff, but it's not out of the realm of what I believe were likely realities after touching the record highs that it did and then coming down. I still think the performance in gold has been stellar, although it's well off of what we saw as record highs. The most recent high being around 34.65. That is this top here. That occurred on May 6th. From there, it went to a pretty severe low, roughly 31.80, and then has rebounded quite well. So, considering everything and really considering the massive run that gold has had, even if you go back to as early as November, gold was at $2,670. Just fathom that, at $2,670 in November, and here we are months later, not years later, and we're looking at a robust troy ounce costing well over $3,000. Right now, pretty much at 3,300 in futures, so spots can be right around there. That's phenomenal performance. That doesn't bode well for other events because gold tends to run to extreme levels during periods of uncertainty, geopolitical unrest, unknowns being present within the economic environment. And so for those reasons, I always feel better when gold prices are lower, but as a technician and an enthusiast of gold, I believe that it is well priced and properly priced. We had a lot of unknowns in the marketplace in terms of leadership in the United States. What we did know is the policies of the former administration in many instances would be done away with, and new economic and political strategies would be evolving with President Trump. And so when you've got that type of dramatic change, it raises a level of uncertainty to a very, very heightened state. And that is what we saw. Realize that the geopolitical conflicts that are embedded within the world have existed for a couple of years. They're still in the news cycle. It's still a terrible situation, not only in the Middle East, but Russia and Ukraine. But that's not what seems to be moving gold recently. Most recently, the spike up as well as the correction down had a lot to do with tariffs and Trump implementing tariffs, and then those tariffs being questioned by judges, and that's kind of in limbo. And then there's a new thing with whether or not China is sticking to their agreement. But the key is global trade really is what gives the global economy the robust and solid world GDP that we've seen recently, and that's what keeps the clocks going, so to speak, the economic clocks of growth. And so that's why gold has been so robust. Specifically, the tariffs and implementing the tariffs had so many unknowns that inherently it would really ratchet up the level of uncertainty as how it would affect the economy. Specifically inflation, it was thought that it would really drive inflation higher. We did get a pushback. In other words, from that point, that was an unsustainable price, obviously. And gold would then fall to approximately 3,270. It would move back up to the highest closing price on records for June gold futures, which came in roughly at 34.65. It opened higher the following day, meaning on the 7th of May, and then dropped to a low below 31.80. And so we've seen a real solid recovery from 31.80 to 3,300. And so we've seen kind of like an oscillation where you get this unsustainable high and unrealistic low or unsustainable low. And right now it's kind of pegged in the middle of that, which is where we're seeing this. This represents a 38.2% Fibonacci retracement from the short data set of the low of 2974 to the high above 3500. So it's a very short data set, and then I have a longer data set. The other thing that's noteworthy on a technical basis on this chart is that gold has remained solidly above the 50-day moving average since the middle of May, and is considered extremely bullish. And as it moves higher and away from the 50-day, that shows you the momentum is building in the market. We see that the momentum has waned a little bit, but it's still real solid. 3261 is the current price, 3264, the 50-day. And pricing right now is sitting at 33 and change. So solid parameters for gold. The fact that it's holding at these extreme highs, historical highs, is significant.
Gary highlights gold is currently holding steady in a mid-range zone between recent highs around $3,500 and lows near $3,200, with strong support seen at the $3,200 level. While inflation hasn't spiked sharply yet, the possibility of it rising later is helping to sustain current gold prices. Some experts believe the upward trend will continue, fueled by unpredictable U.S. policy, inflationary pressures, and central bank buying. Indeed, Goldman Sachs has forecast gold will reach $3,700 per ounce by the end of 2025 and $4,000 by mid-2026. However, it notes that in the event of a recession in the U.S. or an escalation of the trade war, the price could even reach $4,500 later this year. Since January 2025, the U.S. dollar index has declined by approximately 10%, from 110 to 98, which has significantly contributed to gold's rally, as there is a strong inverse correlation between the dollar's value and gold prices. This dollar weakness, combined with bullish trader sentiment, has helped push gold higher. On the chart, gold shows a potential bull flag pattern, marked by lower highs and higher lows, suggesting consolidation after strong upward movement. As the price nears the apex of this formation, a breakout could occur in either direction. However, the setup leans bullish if momentum continues.
As we've just talked about, inflation hasn't spiked as hard as we thought, but the possibility of that occurring further on down the road is, to me, a main contributor that's keeping the support level above 3,200 and 3,300. I think that if it does break below current pricing, it's at a fairly critical point. It could go as low as 3,200, but I see 3,200 as a level of major support that in fact should hold, and should hold if we're still witnessing a bull run in gold. A break below that would signal that we might have seen the end of that bull run and move from a very bullish market sentiment to a bearish market. Gold doesn't continue to gain without any resolution or without the ability to find a base and then not to move to higher ground. We actually see gold at a mid-range because we have a much higher high than is currently trading, $200 above current pricing. We've got solid support, $100 and $200 below. So we've got a very wide range in terms of 3,000 to 3,500 in which gold can stay in that range. And that's what's most interesting to me. If you look at the chart that I brought up, and we look at 2,500, this is back in July of last year. So 25 to 3,500, $1,000 move, but you had a fairly strong move up, very, very shallow corrections, moves up, shallow correction. What has been predominant in the market up until really this last couple of spikes where it moved to 3,470 and then down to 3,200, you had huge upside ticks and very, very shallow corrections. That wasn't the case on this last correction. It was sizable, but compared to what we've seen recently, gold seems as though it's found a footing because it's not near the all-time record highs nor near the recent lows. It's kind of trending water right in the middle. And that to me says that it's kind of found a foothold at current pricing. It could go $50, $100 higher or lower, but it's comfortable in this area. No one's able to really bang the market down without some traders believing there's value and they buy the dip, or move it up to 3,500 and other traders say this is time to hammer it and pull profits on our long position. Right now, it seems as though it's at a range where traders believe they're comfortable with where it is, and they're not looking for these big spikes up or spikes down. That could change at any time as fundamentals change, but at least this is the first time that we've seen it move kind of into a mid-range between recent highs and recent lows. Dollar index, and I'll go pull up a chart to illustrate what I'm talking about. Let me just compress it. If you go back to January 2025, the dollar index is at 109.95. Let's round it up to 110. It went from 110 down to an intraday low. I'm looking at a daily chart, I believe. Yes, a daily chart of 97.96. I'll round that up to 98. So we've seen the dollar in relationship to the basket of currencies it trades against in the dollar index decline in value by 10% this year. That's a tremendous drop. And of course, this is a primary cause for gold running, because when gold is paired against the dollar and the dollar is losing value, there's 100% correlation between dollar weakness and gold strength in the reverse. And so this is what we've seen. Then you add bullish momentum from traders bidding the precious metal higher. You get a double whammy, so to speak, and that's why we've seen gold move to these levels. The one chart I'll pull up right now is where I think we could be heading. And the first thing that we'll note is that we have had a series of highs, 3,500 here, 3,444 here, and 3,349. So we've had a series of lower highs. If we look at this bottom and this bottom here, we've had a series of higher lows. Series of higher lows, a series of lower highs is a flag formation. This looks like, or appears as though it might be a bull flag, but we will have to see as it gets closer to the apex and breaks. It can break either way.
Gold has performed well despite economic uncertainties, political upheaval, and a falling currency. Despite recent volatility, the stock's ability to remain above critical support levels and technical indicators such as the 50-day moving average suggests that it has more bullish potential. With a potential breakout on the horizon, traders are seeking indications that could propel gold to new highs, particularly if inflation fears or geopolitical tensions escalate further. Do you believe gold will break over $3,600 in the following months, or will it continue range-bound? How may impending economic or political events affect your outlook for gold's direction? Let us know your thoughts in the comments. We're always interested in your perspective. If you found this video helpful, like it and subscribe so you don't miss future updates.